Well, good evening, everyone. Welcome back to the channel. I'm going for a twofer today. Did a market live stream earlier. Now I'm going to discuss dividend stock since it seems like most people that are subscribed to my channel just won't watch anything that's not a dividend stock. So here you go. Here's more red meat, I guess. So I'm going to discuss, and this should really be not just red meat, but this should be awesome because this is unheard of, 155% dividend yield. And we're going to go into this because it kind of probably is too good to be true, or at least too good to last. But it is real, and we're gonna go into it. Uh, this company known as ticker symbol ZIM, and like I just said a minute ago, it is real, and it's located in Israel, the country. So kind of a play on words there. So let's go to Yahoo Finance, and this one. So I had heard of this company before, but I had no idea until a frequent viewer pointed this out to me. And then I had a couple of commenters that wanted more details on it, and so I looked into it. And this stock for this company known as ZIM Integrated Shipping Services, ticker symbol ZIM, currently trading at $18.61, and it's up 8 cents in the after hours trading. But your eyes don't deceive you. What you're seeing on the screen right in front of you is a 155.74% dividend yield. Now, how is something like that possibly possible without completely cannibalizing the fund's value? Well, if you look right here, it's obviously not going to last. It can't, because the forward dividend is at $27.55. The stock is trading at less than that. So what does that tell you? But the way this was arrived at is based on the historical dividend payout, which I had to look twice to believe this. I wasn't even convinced. And part of why this is so elevated is because this stock, like many others, has seen a precipitous drop this year. So that's part of the reason. So we'll go back like a year, and you're not going to believe this, but like I say, seeing is believing. So from December 15th of last year, so in less than a year, these are the total dividends that this fund has paid out. And the $17 one that you see in March is just insane. And I already did this math for a commenter, but I figured, what the heck, let's just turn this into a video, because you guys get all excited when I do the QYLD and the JEPQ with like an 18% dividend. So I figure you all go nuts over 155% yield, even if it's unsustainable. Let's see here. No live viewers yet. Usually some of you show up for dividend videos. But this was completely spontaneous. I wasn't going to do a second video. I think this is a first in the history of the channel, a twofer today. But I told you, once I finished my my school, like I've been going to school and working full time for 6 years. So, and I was still posting YouTube videos. So I was doing YouTube like basically with one hand tied behind my back. Well, guess what? Now I got two full hands, so I'm going to be all in. And by the way, the podcast that I started, we've done like two. Well, I went on Andre's channel like a month ago, and then he came onto my channel. Well, we're going to try to start doing that weekly, and we're going to invite more people. Like I have some special guests in the works that I'm working on, and I'd like to get other YouTubers involved too. So I would open it up to anyone. Like I'm willing to debate anyone on YouTube about anything. I'm even willing to do like an open mic and let anyone come on that wants to come on. If someone disagrees with me on something, like I'm willing to debate. I have no issue with that. I guess the only question is if the people on the other end want to come on or want to talk or not. But that's what I believe in. I believe in like an open mic policy, unless you're just a troll, I guess. Which I don't know. I'd probably still talk to you. Anyway, back to the point. So adding all these together from December of last year, so $2.50 in December, $17 in March, which is completely unheard of, $2.85 in May, another $4.75 in August. And if I'm missing something, if one of you wants to comment and say I'm misunderstanding this, because I can't even believe this. This is a $30.05 payout on a stock that doesn't even trade for that. And I just added it up there so your eyes don't deceive you. So that's where this 155% comes from. You take $30.05 and divide by the current price of $18.61, and boom, you basically get 161% if you convert it to percentage. Um, and the ex-dividend date for the last dividend, if I go back, it was November 28th. Let me check again and see if it paid out. It did. It paid. I don't know how this company's doing this, and why am I not in it? Now, here's the thing. Here's the thing. You may say that's a stupid comment, like dividends are stupid and whatnot. But here's the thing. Here's the thing. This is what I want to point out. This is why I'm glad I picked this one, because so I just showed you on the calculator $30.05 in dividends, right? So if you bought this, okay, if this fund completely collapses and it goes to zero, and you only had one share of it, well, guess what? You still made your money back and then some. $30.05. I mean, it could be like Enron or FTX, and you could have lost everything you had and not gotten any dividends. But in this situation, just say the fund goes to zero, you're still making your money back and then some. So if you take the $30 and subtract 1861, you would make $11.44 in profits over the last year, divided by $18.61. That's a 61% gain in a crappy market, one of the crappiest markets we've seen in years. So tell me dividends suck. I like dividends, and I always will. I don't care about the tax ramifications. If you're worried about taxes, do them in an IRA. Like, do them in your Roth, do them in a traditional IRA, reinvest them, do the DRIP program. You don't have to worry about tax until you withdraw it. Or in the case of a Roth IRA, you don't have to worry about tax at all. But what other analysis can I give you here on this company? So earnings, did they already report earnings? Because, I mean, this is nuts. 3 out of the last 4 quarters, they beat earnings. And I had a commenter ask me some really detailed questions. They were like, what's your honest thought on this? Like, should I buy this? I mean, I would think the dividend's not sustainable, but somehow this company, they're beating earnings and they're paying out an insane dividend. It just doesn't make sense. So I'm going to look at their balance sheet next, which I don't spend enough time on fundamentals, but I'm going to go and look into their actual financials here. So if I look from 2018, so total revenue has increased exponentially. I mean, it's more than 3x in this sample time period here from 2018 to 2021. Trailing 12 months is higher. So the revenue has actually more than 4x, almost 5x with the trailing 12 months. Cost of revenue grows in proportion, which you see that typically with most startups. But gross profit is impressive. Operating expenses seem fairly low relatively. Operating income has gone up very impressively. Look at that first year, and then look at second year, third year, and then from 2020 to 2021, just insane. Net non-operating, and then you got pre-tax income, tax provisions. Something's just like almost too good to be true about this thing. I mean, like I said, I couldn't believe this when I had a frequent viewer point this out, and I have a feeling you'll show up on here eventually. You haven't yet, but the person that pointed this out usually shows up on here. Okay, back to this. So EBIT, EBITDA. Okay, so looks pretty good. I don't see any major red flags, just looking offhand. Cash flow, negative investing cash flow. Okay, so looks like there's some issues on the cash flow here. Negative financing flow, in cash position, still positive. Capital expenditures, issuance of debt, repayment of debt. Free cash flow looks tremendous. I mean, this is I'm not believing this. Income statement. I'm going to look at all 3. I'm doing as deep of a dive as I can on a video like this. I'm going to look more into this. I'm going to go to my other sources that I have. I'm going to look at, like, the S&P. Well, they used to call them S&P reports, but I'm going to do a deeper dive on this because I may want to get into this. As you all know, I don't like to pitch anything I wouldn't do myself, unlike other YouTubers. Oh, we just looked at this. Oh, so I didn't go to the balance sheet. Yeah, okay. 2018 total assets. Total assets have 4x from inception. Liabilities have gone up in proportion. Total equity, total capitalization, common stock equity, capital lease. I'm just perusing for like red flags here. Net tangible assets. I mean, this looks solid. Invested capital, tangible book value has increased dramatically. That's one of Warren Buffett's favorite metrics. Well, what is it? Book value per share, which it's a little outdated, but you're not going to find it. His historical metric, you're just not going to find anymore because stocks are still, even in this downturn, stocks are still way inflated. Net debt, shares issued. I mean, this this looks. I'm not seeing any glaring red flags here. Now let's go back and let's see. Let's see how much this has dropped, because who knows? This could be a good buy. And now here's the thing. Going back to the dividends argument. So there's a lot of channels on this platform that know finance. Some of them know it really well. Some don't know it. Some understand it like a 5-year-old. And they have like millions of subscribers. It seems like, believe it or not, somebody should do a graph. There's like an inverse correlation between number of subscribers and financial knowledge. So I think as financial knowledge goes this way on the graph, subscribers kind of go the lower way. But as financial knowledge goes the down way, subscriber count seems to go up. So they're, in a way, they're like inversely correlated. Not saying everything else equal that that's a reliable statistical sample. I'm not saying just because somebody has less subscribers means they're better, but there tends to be a correlation between that. I mean, just look at me, for example. I'm at like 1228, and I know a lot. Obviously, I think I know my stuff pretty well. I have a master's degree in the subject, and I know this stuff in practice. And I mean, I've been in the industry and whatnot. So, but my sub count hasn't exploded, as you can see. But here's the thing. Okay, so about dividends. Dividends are not a bad thing. So finance 101, the basics of finance. There's two ways that a stock historically produces a return or pays out a return to shareholders. So you have capital appreciation, which you realize that when you sell shares of the stock, or dividend payouts. So dividend payouts come by no choice of your own, unless you're buying the fund to get dividends. So there's like two ways. If you look at the basic stock growth model, it's like the price of the stock. It's like the first formula they teach you in finance. It's like D minus G over G, basically. So dividends historically have been one of the most fundamental ways that a company has distributed its growth back to shareholders. Now, I get it. Some companies like Berkshire Hathaway doesn't pay a dividend. So Warren Buffett, he just reinvested. So you can look at it like the appreciation in the company. It's like your dividend being reinvested, or you could just do that yourself, or you could take it in cash. But I like having that option. But with this one, what I want to look at, so going back to like early 2021, we were at $12.05 a share. The stock, and here's part of the deal here. So the stock peaked at almost $89 a share. Actually, the 52-week high is $91.23, which it got to in mid-March, and then it's dropped from there. So this could be a good buy, but how long they'll be able to sustain this payout remains to be seen. They just paid out a very decent chunk of a dividend just really like 10 days ago at the end of November, as you saw. And let's go back to that again. Because I'm not sure if there's like a pattern to how they're paying dividends. Oh, and that reminds me, another way, and mutual funds do this too. It's like a capital gain distribution at the end of the year. It's like a dividend, but it's not called a dividend. So let's see. $2.95 in November. They paid August. Are they paying quarterly? So we got December, March, May. I guess it is about quarterly. So then the next one might not be till March. I may have to throw some money at this. It could be a speculative, gamble, but I mean, it looks promising. No capital gain distribution. There wouldn't be any stock splits, but sometimes you never know, it shows up. What's the other one? Historical prices. Okay, so dividends. Let me go to maximum. Let me see, because I don't know if that was the first one it paid out last December. No, it wasn't. August 2021 was the first dividend this ever paid out. $2.50 in December, and then when it was at its peak, and this is part of the reason the stock dropped, because this is what happens, as most of the dividend haters will point out to you. The dividend comes right off of the price of the stock. It comes basically right out of the company's balance sheet. It comes right out of the cash of the company. So if the stock's trading for $80 a share, like it was back in March, and you paid out a $17 dividend, well, that stock's going to drop down to $63. And then it would have to, based on market performance, it would have to recoup that to get back to where it was. So that's called the ex-dividend date when that happens. Anyway, that's about all I have for you on that one. Hope you enjoyed that. And let me check here. No live viewers. Oh well. Hopefully this will get watched. And if you enjoyed that, please remember to like, comment, and subscribe. Thanks for tuning in. Take care.